This is Adam Olsen, Embark's accounting advisory and national practice leader, and you're listening to Accounting Matters. We're rounding out the sixth and final part of our bonus episode series on the AICPA's 2022 conference on current SEC and PCAOB developments. And I'm welcoming back to our podcast our resident ESG, I'll say specialist, guru, the guy that lives and breathes in this space, Robbie Sundberg, who is a managing director and also our national market president, to kind of share his thoughts and ideas and observations from the conference itself. So Robbie, welcome back. Good to see you here.
Thanks, Adam. Happy to be here.
Yeah, and I know I feel like I'm saying we're saving the best for last year. We're talking about ESG, but that's not to say that we have the least amount to say on it, because I think, as you and I both observed throughout the conference, is that the concept of ESG or climate-related reporting disclosures, it was really woven throughout the 3 days there in multiple sessions, and just heard a lot of discussion around it, not only in the planned remarks during the sessions themselves, but even just mingling with folks in between sessions and at lunches at the conference. Just a lot of buzz around that. But before we jump into maybe kind of recapping some of the things we heard and the thoughts that were shared, maybe Robbie, I'm asking kind of each person that attended the conference this year, just overall thoughts on the conference, things that kind of stood out to you, or just the feel for it, spending 3 days out there with all those guys.
Yeah, I mean, great time. I guess big takeaway, though, if I focus on that, was that there were really kind of two topics that found their way into just about every session, every speaker's comments, and those were really crypto and ESG. Really found their way, whether the session was focused on those issues, or whether it found its way into the conversation in a more ancillary way. Every conversation sort of went in that direction at some point.
Yeah, everyone had a viewpoint to share, whether they planned it or not. It seemed to edge that way. So no, I would definitely agree. And we actually just wrapped a special episode talking about some of the crypto asset, digital asset considerations that were discussed at the conference. So makes sense now to segue into some of the ESG and climate matters here. So like I said, there was a lot of discussion around ESG. I think from the onset, it was they kind of went ahead and just put the messaging out there. Obviously we got the SEC there, but there was going to be no update on the SEC's proposed rule. No direct comments on the timing of when that rule was going to be released. So I think a lot of people that maybe had come in hoping to get a little sneak peek or a little hint at where things stood and maybe when we can expect that rule weren't and didn't. So. But that's not to say it didn't stop the conversation. I think we heard a lot of remarks from a lot of people from the very first session, with the commissioner talking about just some of the rulemaking around climate, to, acting chief accountant Paul Munter. He answered ESG questions. And then, like you said, there were other sessions where we're hearing from both investors and preparers on their perspectives around ESG and ESG reporting. Despite not having updates on where things stood or whatnot, there was still, not just focus, I think, even just on the SEC's rule, but really kind of they opened a broader discussion around just ESG and the implications on both an international front. So I don't know if you felt that as well, but I felt like there was definitely, if we just think about the progress that the international front is moving on compared to where the U.S. stands, are obviously a little bit further ahead. And so just the breadth of those rules and stuff, and the ability for those rules to pull in SEC registrants and U.S. companies alike, I think that was also top of mind.
Yeah, and I think interestingly, we heard a couple of different perspectives on some of that too. So even starting kind of with the first session with Commissioner Pierce, I know one of the concerns that she expressed right off the top was the potential for kind of importing some of those global, especially European, EU requirements into the U.S. regulatory environment, and just some concerns there associated with importing some of those rules. And so that was interesting, because then on the other side, other speakers, other presenters over the course of the conference on the other side of it kind of talked to the fact that really we do have kind of regulatory forces here in the U.S. We have broader stakeholder forces that are also driving kind of this enhanced ESG reporting, if you will. But there's increasing pressure on U.S. companies for these other regulatory requirements in other countries, specifically the EU with their CSRD and other initiatives there.
Yeah, and I thought it was interesting because I think Paul Munter was making remarks about this and basically said that, you know, obviously the SEC is monitoring the rulemaking that all these other standard setters are in the progress they're doing, and I think to an extent trying to work with and learn from what those different standard setters are doing, and how that ultimately impacts, you know, the commission's final rule is to be said. But I got the sense that they're trying to find as much commonality or convergence where they can. You know, this was also on a related topic that we saw, which is like the IASB and the FASB talking about convergence and accounting standards. I think this is another area where regulators are looking to figure out, is there a way to make the standards more or less kind of operate in tandem with each other and not have so many different subsets of rules. But I also think we're in a space where things are moving so quickly, and the changes and the regulations, and you know, it may make that challenging just given how many different initiatives that are outstanding and out there, and whether or not we can truly align on everything. So, you know, I think there's a lot to be said about what'll happen. But I do feel like the SEC is also trying to think about how this can be cost effective for companies that may be impacted by numerous rules that are, you know, out for proposal right now.
Absolutely. Yep.
So I know one thing, since you know, the SEC was being more or less hesitant about weighing in too heavily to maybe just to end up slipping some information that they shouldn't have. I think a lot of the sessions then tended to focus on other stakeholders in the process. So I know there was one panel there specifically, and it was led by KPMG's ESG leader, Maura Hodges, who more or less had a group of preparers, so different folks that are in ESG reporting or controllership type roles at different organizations share their thoughts just on things that they think about as it relates to ESG reporting at their companies. And, you know, I think that one of the big things that stood out as part of that panel was basically for companies, registrants particularly, not to think of ESG as just like a compliance exercise, right? That there's a lot of value in ESG reporting, and that companies that are viewing it as compliance and are just sitting on the sidelines waiting for any final rulemaking to come down are going to find themselves in a bad position once those final rules come out. And if they haven't started their ESG journey, they really need to be moving forward with that. Were there anything else from that panel that kind of stood out to you as good takeaways relevant for people out there if they are an organization that is thinking about ESG or maybe impacted by any of these rules?
Yeah, there were a few. And so I guess some commonality that we kind of heard across the panel. So one was really the importance of cross-functional teams. ESG unique in the sense that it really does require engagement across the organization, input across the organization. And that takes a number of different forms, right? Input from a data collection perspective, input from a strategy perspective, potentially. But then also, as we think about just an education, them understanding kind of the purpose of the reporting, the purpose of the different regulations that are out there, what's coming, and that education element becomes really important. So that was one key takeaway that was just a common theme. A couple of others would be from a data perspective. Data is clearly the challenge when we think about ESG. Not new to anyone who's lived in the ESG world for more than about an hour. The ESG is driven by data. Data is the key piece that allows the whole thing to kind of go, and allows the reporting to happen. All your strategies, you can't track them if you don't have the data to be able to measure. And so data is the big challenge, especially with global organizations. Gathering data is a big pain point for a lot of organizations. And then kind of the other side of that is kind of the process and controls piece, which is another key theme. And so given all the different data sources and the cross-functional teams that are involved, ensuring that you have appropriate process and controls, given that this currently a lot of this data is already being publicly disclosed, but in the future state, a lot of this data is going to be disclosed in a company's 10K, right? So the level of scrutiny associated with that and the level of process and controls that needs to be in place, of course, increases at that point. And so that was another key theme, is just the importance of process and controls. And that's an area where companies certainly cannot wait until, the rule is sitting in front of them and effective and, in the current year kind of a situation. And so really, that's one area in particular, process and controls around all the data that companies just can't wait on. And that was a key theme of the panel.
Yeah, no, I agree. I think those are all great points. I think one other thing that kind of stood out to me was there was also a little discussion just around how governance really plays a role as it relates to a company's overall. You say ESG because governance is a component of that, but just as it relates to their sustainability or their climate reporting, there were discussions. I can't remember which of the panelists specifically, but a lot of them mentioned, their organization set up certain steering committees that were focused on ESG, and that really helped just provide a different layer of oversight. It provided more accountability for the organization. It obviously helped enhance some of that collaboration. So you mentioned like cross-functional teams and the ability to do that, but just kind of facilitating the need for these different groups to work together. And then, I think that there's that governance kind of oversight, theme that was discussed also tended to focus on just, providing some strategy around the disclosures and making sure that the narrative that the companies are providing in their sustainability reporting, ESG reporting, or their climate reporting, once these rules are finalized, it's consistent, and it really drives the message that the company wants to have across all of their kind of external communications channels.
One final point, just in terms of kind of the connection between controls and education, right? Like one of the big challenges, and we heard about this some as well, right? One of the big challenges is that a lot of the places this data is coming from, these are not groups that are used to providing data for financial reporting, right? And so that's another, there's a ton of education that's needed just to help these stakeholders understand how the data is going to be used and the controls that need to be in place. Because again, they're non-financial metrics, not individuals that are used to kind of the level of rigor that's involved with these disclosures.
Yeah, that's a great point. Yeah, just you've got people within the organization. If it's not your core accounting, finance, reporting teams that are steering your ESG reporting efforts, but you've got others involved in the process, is just making sure that everyone's on the same page with the level of rigor. And I guess that's a good segue, kind of just speaking of the level of rigor. So I know there was an additional session that really kind of focused on the need for ESG assurance and the ability or the role that audit firms or others may play as it relates to providing that assurance. So I think you hear more and more that companies are looking to have their ESG information assured and promote credibility, reliability. Maybe that's what their peers are doing or their competitors are doing, and so there's a growing inclination for companies to want to do that. And then obviously the proposed rules have aspects of them that include the need for assurance on the reporting and those disclosures as well over time. And so I guess as it relates to ESG assurance, I think, one thing I thought was interesting was that, obviously the audit firms are recognizing they're going to be, this is a moneymaker for them, frankly. So great opportunity for them to continue to provide those assurance services outside of traditional financial reporting, but also over these different metrics and disclosures. And, they're recognizing the need that they have to upskill their workforce to be able to understand these rules, understand these requirements. And so they're making moves to do that now. So I think there's definitely a focus there. I think another thing that was kind of interesting around the assurance piece, at least, is just, we've talked about at the onset that there's so many rules in play right here. So just the ability to have teams or personnel at these different firms that have the knowledge to be able to apply assurance rule like procedures and issue a report over so many various rules and different regulatory requirements, I think is also a bit of a challenge too. Is just trying to, when you are upskilling until we get some more convergence there, firms are going to be challenged, I think, with, having a team or a workforce or a function that can provide assurance across all the possibilities of potential rule banking that exists.
Yeah. I think one of the interesting things on that front, just from a talent perspective, right, that we heard was around the way that many of these audit firms, especially the big ones, right, are really focused on leveraging their existing teams, audit teams, and then leveraging specialists in the various areas that the ESG would touch on, and in a not dissimilar way from the way that they would leverage specialists in any other part of their audit process with tax or valuation or any other specialists they would leverage on an audit.
Yeah, cool. Well, anything else that you want to highlight from the conference on ESG? I feel like
Yeah, I mean, I think we covered a good bit of it, obviously at a high level, but I think, the only other perspective that we didn't really touch on was really the investor specific perspective. But I think the big takeaway there was just that, these ESG reporting initiatives are something that investors are 100% behind, right? They too are looking for, reliable data and for comparable disclosures, right? And so comparability between entities that they're evaluating from an investment perspective. And so, of course, all of these ESG reporting initiatives really are important to them in order to make their evaluations and their investment decisions. And so that was kind of the big takeaway from that perspective.
Yeah, and I guess the only other maybe comment I would make on this, like in the absence of any final rules right now, like there's, I think we still kind of purport back to existing SEC guidance as it relates to climate related disclosure requirements. And I think, can't remember which session it was in, but they highlighted a number of these kind of dear issuer letters that the SEC has put out, which are obviously designed to help registrants be mindful of areas where the SEC will likely comment, and providing sample comments on different things of observations that they're looking for as they review filings. So just a reminder there for companies to look back to some of that existing guidance that is here currently, not specific to the breadth of the larger proposal that's outstanding, but there is existing guidance as it relates to certain climate related disclosures today.
Yeah, that's a good point. They did reference a few times the 2010 interpretive guidance, and that was going to continue to be a focus area, even absent any kind of a climate related disclosure rule. Right. And they even kind of put up the list of the most frequent topics for SEC comment letters, and I think climate related risks disclosures kind of rose even into kind of around that top 10 range. So definitely a focus.
Yep. Awesome. Well, I think that's a great spot to wrap it up. And, thanks again, Robbie, for joining me on this final episode of our bonus series, recapping the conference. Like I said, there's a lot more to follow as it relates to ESG. So we definitely encourage our listeners to pay attention, especially as some of these proposed rules move into final release. We'll for sure be recapping those rules and more as the noise around ESG continues into 2023 and beyond. And so until then, wishing everyone well and everyone back on a future episode of Accounting Matters. We'll talk to you then.